Hey, everybody. Welcome back to Chipstock Investor. Happy Monday. It's here again.
It is.
Are you excited for this week?
We do not have a case of the Mondays this Monday.
No, we do not. In fact, we have something really important that we would like to cover in today's episode. We have covered Wolfspeed, ticker symbol Wolf, WOLF, a few times in the last couple of years, and we want to continue to further explain why this business is still uninvestable for us here at Chipstock Investor.
Or maybe we should call it this episode Chipstock, not investor. Maybe we do have a case of the Mondays, actually.
Sounds like somebody's got a case of the Mondays.
Okay. So here's a stock chart from the last couple of years. You can see Wolfspeed peaked during the chip shortage, especially chips supplying the automotive industry, silicon carbide, a key ingredient in electric vehicles. So Wolfspeed was a hype stock during that period in 2021 and 2022. And it's been all downhill from there, except that little rally at the tail end of this stock chart. What's up with that, Casey?
Yeah, you may be wondering if Wolfspeed is about to turn a corner. And Wolf did just announce more CHIPS Act funding, and this is probably the reason for the rally at the end of September. You can see $750 million in CHIPS and Science Act funding, $750 million in financing from the investment group Apollo, and $1 billion in cash tax refunds from the IRS.
In total, Wolfspeed has about $2.5 billion in funding that they can now finish their US based manufacturing facilities with. All of this is related to that Section 48D from the CHIPS Act. Casey, I took the time one weekend and read through the CHIPS and Science Act regulation. And Section 48D is specifically for advanced manufacturing semiconductors in the United States. Fun little thing in here during a recent Q&A on the CHIPS Act, someone was there and asked about manufacturing semiconductors in space. Here's a look at the in-space economy that some are trying to develop. Yes, manufacturing chips in space is something that is being talked about.
Good grief.
That's a topic for another time, or maybe not a topic
No, we're not
now.
talking about that. We're not talking about that.
Fair enough. Back to Wolfspeed.
Let's focus on just manufacturing semiconductors here on Earth for starters. I feel like that's appropriate, and they haven't done that yet.
Fair enough. You're right. Wolfspeed is
They're working on it.
Yeah, they're working on it.
So the CHIPS Act funding is very hopeful, but the company is in some pretty dire straits, as you can see from the guidance. Now, Wolfspeed reports on November 6th for the Q1 fiscal year 2025, but this is their expectation for that upcoming quarter. You can see it's not super great.
Mhm. Yeah, as we've covered multiple times, the company is in process of building multiple new manufacturing facilities on the East Coast of the US, in upstate New York, in the Carolinas, and a small facility in Texas. And their expectation, because these fabs are only running at 20% capacity, or at least that's their expectation, is that they will run at about 25 to 30% capacity as this new fiscal year progresses. Their gross margin could be mid single digit percentage at best on an adjusted basis, not on an actual GAAP, generally accepted accounting principles basis. This company is still going to be very much running at a steep loss. They needed this CHIPS Act funding to continue to build out these facilities and scale them up.
Before we continue, let's give a shout out to today's sponsor of our video, public.com.
So heads up, folks, interest rates are falling. Hey, that's actually good news for Wolfspeed as they begin to refinance some debt and probably take out more debt in the next year or two. For you as an investor, falling interest rates means if you're looking for interest bearing investment, time is short. The Federal Reserve has indicated more interest rate cuts are coming, but you can still lock in a 6% or higher yield with a bond account at public.com.
Public.com's bond account allows you to lock in that higher yield with a diversified portfolio of high yield and investment grade corporate bonds. So maybe while others are watching their returns shrink, you can sit back with regular interest payments. But you do need to act fast.
Yeah, yields are not locked in until you actually make the investment. So the good news with Public's bond account, it only takes a couple of minutes to sign up for an account and lock in that 6% or higher yield.
Lock in that yield with a new bond account at public.com/CSI. Wolfspeed has also delayed construction of that facility that they promised in Germany. This has always been a very highly ambitious plan, building multiple fabs, newly constructed fabs. And as we've been trying to explain all along, chip fabs take a lot of time to construct. They're very expensive to make, and it takes a long time to reach full production. So I feel like at this point, you can just view this as a investor cash incinerator. That's what we're going to call this.
Yeah, for the time being, anyways. And again, all this funding that they just received does not even begin to address what is still, at this point, a planned new facility in Germany for silicon carbide. So let's take a look at the balance sheet. So up to this point, Wolfspeed has taken on all of this debt, a few $1 billion just in the last year and a half, 2 years. Don't get too excited about the cash balance that's in blue. That cash balance has increased because of the new debt. And as you explained with that press release at the outset of this video, Casey, the debt is actually going to go up again due to the new 750 million financing round led by Apollo Group. So let's break this down a little bit because the balance sheet in this case is really, really important when you're assessing investing in a company like Wolfspeed. So here's the current annualized revenue through the most recent quarter that was just published a few months ago. About 800 million. It looks like maybe what's safe to say Wolfspeed is on track to maybe get back to 900 million, maybe even $1 billion in annual revenue this fiscal year for fiscal year 2025, which will end in June of next year, June 2025.
According to Wolfspeed's CFO, Neil Reynolds, the expansion is going to support about $3 billion in revenue, just over triple the revenue that they reported in fiscal 2024. Now, to continue with that thought, this revenue story does sound fantastic, but the balance sheet makes this a no-go for us. Part of the CHIPS Act and new funding round will require about half of the balance sheet to be restructured. Reynolds explained this in 3 parts.
Okay, first point here highlighted in yellow from this quote from Reynolds. About 3 billion of the current debt that exists on the balance sheet is convertible debt that converts to Wolfspeed stock, Wolf stock. And that debt was going to convert in 2026, 2028, and 2029. That debt is going to need to be restructured, probably to interest-bearing debt going forward. Second point in blue, there's another bit of debt interest payments, about $120 million worth that is also going to get restructured. And then that final point in pink at the bottom, to help with all of this restructuring, Wolfspeed is going to need to raise cash, more than likely by raising an additional $300 million via issuance of new Wolf stock. And so what that basically means is that convertible debt in 2026, 2028, and 2029, that was going to be a dilutive event for existing shareholders because a bunch of new stock was going to get issued in those 3 tranches. That's just basically getting pulled forward to fiscal year 2025. The problem with this is at this particular point, Wolfspeed's market cap is $1.9 billion. So an additional $300 million in newly issued stock. This is, again, a highly dilutive event that instead of being factored into the future over the course of the next 3 to 5 years, is now getting pulled forward to this year. This can be an issue if you're considering purchasing Wolf stock. Okay, now let's shift over to the other half of the existing debt on Wolfspeed's balance sheet. And this is debt and an advanced deposit bears interest owned by Apollo and Japan's integrated device manufacturer, Renesas.
So for that debt, you can see that Wolfspeed has about just over $3.1 billion. And the interest payments on that has ballooned all the way up to $243 million in this last fiscal year, 2024. And that interest payment is definitely going to be going up.
Yeah, probably over 300 million in this next fiscal year.
Debt collection is a serious problem at Wolfspeed.
Yes, it is. So this is why you said this kind of looks like an investor cash incinerator at this point.
So, in addition to shelling out all that capex to finish the new fabs, and that will be reflected in the free cash flow, which is in purple, you can safely assume, as Nick said earlier, 300 million plus in annual interest payments into the assumptions for the GAAP net income or net loss in this case.
Mhm.
Here's Wolfspeed's balance sheet again. In the coming quarters, you're going to see both debt and cash increase. However, GAAP net losses and free cash flow will continue in the negative and will persist for the foreseeable future.
Yeah, and this is the issue that we have with the expansion story that's being told with Wolfspeed and has been told for the last couple of years. Let's assume Wolfspeed finishes all of these US based facilities and is able to max them out to $3 billion in revenue, let's say by the end of this decade. And then let's say as a result of that, they're able to operate at, let's say, a 20% operating margin. $600 million in operating profit would be the result of that. However, after assuming that operating profit, you have to assume something in the order of about half of that, 300 million, possibly more, is going to get written off as an interest payment to companies like Renesas and Apollo Group, which once again was more than happy to give Wolfspeed some cash in exchange for holding the debt at a very high interest rate. 10% plus is the going interest rate on these new debt instruments that was led by Apollo. Folks, Apollo Group wins. Congrats to you guys over at Apollo for striking this deal. For retail investors and ordinary stockholders of Wolfspeed, you're going to be fighting an uphill battle in the next few years, even if the revenue and profit margin does indeed improve as they finish up these US based fabs. And again, just to drive this point home, this is important. They haven't even begun to address the funding needs for that facility that they promised Germany.
Just to reemphasize our key takeaways, it's awesome that Wolfspeed is getting CHIPS Act funding, this investment from Apollo Group, and Renesas's deposit for manufacturing those silicon carbide wafers. All of that will allow them to finish the fabs they're working on in the United States and start with production. However, it is not great that they have a mountain of high interest debt, and they're going to have to pay a large portion of any profit they make to those debtors. So this makes Wolfspeed still very uninvestable for us here at Chipstock Investor, certainly as a long-term play.
Yeah. If you're trading the stock, okay, that's fine. That's probably a different story. A few of you have commented about missing Wolfspeed stock in September when it reached those all-time lows, but we're not here talking about swing trades. So long-term, this one is highly problematic.
Stay tuned for more earnings coverage here at Chipstock Investor. Make sure you're subbed to the channel and check out our Semiconductor Insider membership. Just $5 gets you access to our Discord channel, live Q&As, lots of expanded discussion and expanded research available through Ko-fi, link in the description below. Stay tuned. We have Cadence Design Systems, Amazon, onsemi, all reporting this week.
Unfortunately, we won't be able to get a video out for all of the businesses that we cover, and that would be the benefit to you if you're interested in full breakdown of all the companies that we cover. It's over on our Discord channel.
See you all again soon at Chipstock Investor.